What's up, future millionaires? QCLEE here, the founder and owner of the Motivated Trading Company, back and better with some more free game for you guys today, baby. Now, if you're sick and tired of missing your entries, you're setting your orders, they're not getting filled, you don't know why, and it sucks because you're missing so many of these good trades that we're giving you, well, you're in the right place because I'm going to show you exactly how to get around that. And if you stay to the end of this video, you will no longer have that problem, baby. So, without further ado, let's go over all the factors that go into this and how to get around it, baby. Now, first, let's explain bid orders. Let's go ahead and explain bid right here. Bid, mid, and ask price. All right. So, what are all these things? How do they relate to what we're talking about right here? Okay. Now, the bid. What is the bid? Let's just set this bid at 0.10. Mid, 0.11. Ask, 0.12. Now, these are all times 100 because they're contract premiums, baby. $10, $11, $12. Now, what do these all mean? Is this just mumble jumble? No. Okay. The bid price. This is the bid price. The price where us, little investors, yay, retail investing is fun. But the bid price, us right here, we're bidding to get this contract at, okay? So 0.10, the lowest price, because whenever you buy something, don't you want that good discount? Don't you want the best value possible you can get for it? Don't you want to pay the lowest price for something that you're getting that's valuable? Exactly, you do. So that's why the bid price, boom, boom, $10 is always going to be the lowest price in the spread, okay? Because you want to get in for the best price possible, okay? Now, let's skip over to ask price. Here's another retail investor. Let's put a little money bag in his hand because we're the ones that own the contracts that us bidders want to buy already. Ask price is going to be the price that the people who own it, see he owns it, got the little money in his hand, he's made some money already. This is what he's asking to sell his owned contracts at. And when you sell something, don't you want to get the most money possible for that asset, baby? So the ask price is going to be the highest price. So he's asking for $10, this guy on the left here, okay? Left guy asking for $10. And then this guy on the right is asking for $12. Now, how is this going to go? Now, the mid price. The mid price is going to be the average, of both of these, okay? So don't overcomplicate the mid price. The mid price is just the average of both of these right here. The bid price is what we're bidding to get in this contract at. Ask price is what people who own those contracts are asking to sell those contracts at. And they meet in the middle with the mid price, baby. Now, where do we enter? Now we know what all these are. How do we use these to get good entries? Now, it depends on what you want. Now, usually, personally, I enter at the mid price because it is pretty reliable. You'll probably get filled if it doesn't change on you. And by the way, all of these can change. The contract premiums are usually changing during the day. They're usually going to be changing. So make sure you're watching to what that current bid, mid, and ask is if you want to get those great entries. Now, I enter at the mid usually because that usually gets filled. That's just the middle of the bid and the ask, baby. But say you set a limit, which we'll go over in a second, what limited market orders are. You set a limit at the mid price and it's not filling. It's not filling. Oh, 2, 3, 4 minutes go by. It's not filling. You're missing out on these good profits. What do? Guess. You enter at what? The ask price. Because if I just skip over and put my limit at 0.12, then I'm giving the askers exactly what they want. So instead of bidding at 0.10 or 0.11, I'm just getting in at 0.12. If you enter at the ask price, you will usually get instantly filled without a doubt, without a question. If you enter at the ask, they will fill you super fast because you're going to him. You're like, yo, bro, I'm giving you $12. You want $12. I know you do, bro. So he's going to take your $12. You're going to get his contract just like that, baby. Now, what if I'm already in the contract? I'm one of these guys. I've got my money. I've made some profit, and I want to sell. I want to sell fast. I've tried to sell at the mid. I tried to set my limits for the mid price. It's not filling. What do? I go over and sell at the bid. I'm like, yo, I see you guys over there. You guys want $10 for this? You know, it might be worth 11, $12, but that's okay. I want it off. I've already made my profit. I entered at like 0.05 anyway. Who cares? So you go over and tell these guys, yo, I'll give you $10 for this, or I'll sell it to you for $10. They're like, perfect, man. Yeah, that's a steal. And they instantly take your contract and you get their money, baby. So if you're ever in a rush, if it's ever not filling, you want to enter at the ask and sell at the bid, and you will 99.5.9% always get instantly filled as long as there's volume and open interest on that contract you're trading. Now that you know what to do, how to use all of these to your advantage, what are limit orders and what are market orders, and how do we use those to our advantage? Let's find out, baby. All right, limit orders. Let's do limit order right there. And market orders. Okay, limit orders. These are only going to get filled at the specific limit. Let's say it's 0.11. You set a limit for 0.11. This only will get filled at 0.11. If you set a limit for a contract to get in or to get out, it will only fill if someone offers this to you at 0.11. Now, there's plenty of orders going in down the strip. Bunch of orders, 0.10, 0.11. That might not be you though. You might not be next in line to get that. 0.10, 0.12, 0.11, 0.11. You still might not get it because remember, other people, there's thousands of other people bidding for this too. 0.12. Some guys, big balls, 0.13, 0.10. All right, all these orders are going in to sell and buy, okay? But if you're trying to buy in for 0.11 and you just happen to not get one of these orders, what do you do, okay? You want to enter or sell at a market order. Market orders right here, they get filled at whatever the next available order is. So whatever is next, whatever is available next, it could be any price, which I want to be very clear. Buying market and selling market is risky. I don't even do this, okay? I'll always use limits. If I'm desperate, like I said about a few minutes ago, I'll just sell at the bid or buy at the ask, okay? I never use market orders unless it's a crazy, crazy day or something crazy is happening. Market orders, they will fill at the next one. So you could get filled at 0.10 or 0.13 or 0.12, or maybe some guy puts in 0.100, you get filled at that, okay? So that's why it's risky. I've had times where, I've taken advantage of this because if you know this, you can play a little trick, which doesn't always work. So when a stock is running up really, really fast, running up or running down really, really fast, usually the SEC, the Securities Exchange Commission, will halt that stock, okay, because they're suspicious. Why is it going up so fast? Why is it going down so fast? And when people see that the stock is halted, a lot of people will set market orders for their options or for their shares that they have in that stock because they're scared and they want to sell immediately. Sell because they made their profit, they want to get out, or sell because they're in losses and they just want to get out. Now, when you have a lot of market orders going into the market, say the stock is worth $100. It ran up to $100. It started at like 20 and it ran up all the way to $100 in one day. Okay. And now it stops at $100. It's halted. Boom. It's halted. Okay. Now everybody else is like, oh crap, I gotta sell. Market orders. Okay. Now I'm over here in the tape because I'm a smart guy, I'm over here in the tape. I'm gonna set a limit order for $50. There's people out here selling, for $100. People, and here, let's say this is a market order. Market, just we'll act like that says market. Market order, so anything going down the tape, this is going to be selling. Now, say this guy sells market. This guy sells market. He owns this. Yay! I think I'm about to make $100. Yay! He sells this. He owns this stuff right here. We'll put it in his hand again. He sells this at a market order. He uses market. Remember, it gets filled at whatever the next buy order is. Now, luckily, if you're lucky, you'll be the next buy order. You'll get a $100 stock for $50. I've done this 4 or 5 times in my trading career. It doesn't always work, but sometimes it's worth a try. So that's a really cool thing you can do. But I hope you all learned exactly how to enter. If you stay to the end of this video, give us a like, give us a subscribe, baby. Comment what you want to see us cover next. We've got lots more free game coming for you all, baby. And yeah, this was QCLEE with Motivated Trading, baby. I'm out.